has done quite well. You mentioned the points of our progressive wage strategy, our EPF Pillar 3. So I think Malaysia jumped the highest, and now we're at number 7 out of all the markets for employer support in the index. So I think broad-based globally, this year has been a period of uncertainty. I would contribute that to why overall decline globally. But there are some shiny spots like Malaysia, and we've done quite well at the 7th position.
Like I mentioned, we see that the global trend is cooling, but Malaysia is moving in the opposite direction. So let's move on to Malaysia. In the context of Malaysia, Malaysia is one of the only 2 markets that's improvised or improved across all 3 pillars, like I mentioned earlier, employer, government, and so financial support system. So what's been the key driver for this success, Manira?
I think, global financial inclusion, right? It's a myriad of many contributing factors. I would attribute our resilience to overall, economic policy, stable markets, strong support from the private sector. So it's not one factor that gets us there, but a combination of stability in policy, stability in markets that gives confidence and rise to employer as well as employee alike in the private sector.
And we've seen some of those policy shifts play out, quite recently as well, particularly around wages and also retirement savings. So let's touch on the progressive wage pilot and also EPF account 3 restructure that's come into play. The report highlights these as contributors. So can you give us concrete examples how these are translating into real life everyday benefits for Malaysian households and especially for lower and also middle income?
So if you study developed markets, right, pension system has contributed to a lot of stability in capital markets because these are, additional pooled savings, and as the middle income rises, the contribution to capital markets gets more deeper. As I mentioned, right, there is no one factor. It's the continuous stability in our policy that has a multiplier effect on capital markets and in turn into the private markets or the private sector. There is no one factor. It is about long-term stability, long-term consistency in policies, stability in governments. So all those, I think, we're on the right track actually for even at further advancement in financial inclusion and financial markets.
So we've just seen perhaps 3 frameworks have been, been focused for the ASEAN that just wrapped up yesterday. So what do you think? How can this actually, all the agreements and also discussions in this context can actually help moving forward?
Yes, I was participating in some of the ASEAN conferences over the last weekend. Malaysia plays a pivotal role, actually. While we are a relatively smaller country by demography, but I think our know-how and our, cultural savviness in bringing together leaders across the region is something to be, applauded for. So playing alone in a 700 million economic block of people, it's not going to work, right? So I think Malaysia has shown the leadership to be part of the 700 million people. And with that, we can have a stronger say. And indeed, you could see all the leaders were in town. We play a much, much stronger positioning in the global markets rather than, alone in this journey.
But however, all these policies, we can make all these policies, all these frameworks can help. But the real challenge is demographics, right? And that's another big challenge. So we've come to the regions, the aging population is growing, it has become a growing concern, which puts pressure on retirement savings and also healthcare and also social security. So in your opinion, how well prepared is Malaysia to address the financial implications of an aging society as a whole? And of course, particularly in retirement readiness and long-term care, are we doing enough or there's so much more to explore?
Yeah, so our income replacement ratio, so basically the IMF and World Bank recommends about 70% in income replacement ratio, meaning if you retire and you earn 10,000 ringgit, you need to actually have 70% ready for the rest of your, your life, your mortality rate. Malaysia today, if I'm not mistaken, is at about 35%. So we are halfway there. And therefore, it's critical that, we do a couple of things, that we embrace the new economy of digital and technology and healthcare. And then secondly is deepening that retirement pool. So if we compare ourselves to across the region, we are actually not bad. EPF has done a fantastic job. It's just that income gap is still there. And then a lot of the B40 are still not equipped, financially. So therefore, when you're not equipped financially, it's quite hard to also prepare for retirement.
So besides aging society, we've also seen new digital tools reshaping how Malaysians manage money today. So you've been a strong advocate for digital micro-investing through platforms like Go Plus Invest. So how has that platform changed the way Malaysians approaching saving and also investing at the same time? And is financial inclusion now extending beyond basic access into richer participation? And are we seeing real behavioral shifts yet for now?
Yeah, through our data, we've launched this. We've launched this financial democratization investments on our platform for about 3 years now, and you could see that we went through a journey of coming up with simple solution, and then at the same time educating, especially the young ones, right? I'm quite happy to say actually when we look into our data, actually a majority are actually 40 years and below, with quite acute higher balances. People between maybe 25 to 35. So it shows that there's a high embrace on digital platforms, to encourage savings and financial, and participation in financial markets. But it takes quite concerted effort to educate, and you could see that improvement is coming up. So we need to know how to speak. So when you dissect that B40, half are maybe hardcore poor, but the other half are actually the younger generation. It's how you engage with this younger generation. And I'm actually quite enthused because I could see them picking up. And the way forward is absolutely digital.
But digital trust is one of the concerns as well. So how can we actually mitigate to that crisis?
Yeah, so digital trust takes a whole, ecosystem framework, right? We are licensed by a Securities Commission, and so there's a step-by-step guidelines how to make sure that we build this trust. So it's really important to invest in Securities Commission approved trust with rising of scams, etc. Our platform is very stable within the Touch and Go digital. So I think we've built a lot of trust. We've acquired over 1 million customers on the platform. And the thing with investing is that you've got to do it continuously and with discipline, because the multiplier effect in investing in financial markets will really grant you long-term returns, especially for the younger ones. So the younger ones, I find are either they're very conservative or they really go all out on the high risk. What about somewhere in between, right? So steady, stable, consistent, repeatable returns is what I think everyone should be looking for.
But after all, this positive trajectory, sustaining is a real concern now. So what will be the biggest risk Malaysia faces in keeping this positive trajectory? And you've mentioned economic uncertainty earlier, and also financial literacy gaps and demographic pressures. So which of these are the most pressing ones, and how should we prioritize in tackling all this at the same time?
Maybe I'll tackle it from the financial markets perspective today. I think markets have rallied quite well. We are expecting Q4 and Q1 to be quite strong in equities, against a few backdrop. So for Malaysians, right, with Fed is going to cut more interest rates, so there will be some dollar weakness. But with that dollar weakness, countries like Malaysia, stability in ringgit, emerging markets should rally. Especially in equities, and we see that China market seems to show China market has rallied like 30%, year to date, whether A shares or H shares. And so there's a lot of renewed optimism in China, and Malaysia is, part of that big dependency on how China does. U.S. President will be meeting President Xi Jinping, and markets are very anticipative and excited about that, because I think it's the first step to improving stock market in the region. So as an investor, it's really important to remain invested. And not time the market, and so therefore rely on fund managers who are long-standing in this. You need to continuously remain invested, because it's very hard to time the market. And so in longer periods of time, right, your average return will be stable. Right? Don't try to time the market too much. In fact, it's a general investment 101. Buy on dips, buy on market weakness, add on to your investments in market weakness. And then now, if you had done that, right, this year when people are, uncertain, look at the markets today, have absolutely rallied.
Munira, we have about 2 minutes left. So to wrap up this conversation, perhaps in your opinion, what's the outlook for financial inclusion for the next year, 2026? And we know that private sector engagement matters a lot. So how can actually Malaysia further engage between employers, fintechs, and also private sectors in supporting inclusion efforts as a whole? Yeah,
so I think Malaysia has already climbed that up. We just need to continue to double down on that. Sessions like this, right, hopefully will spur on more interest and, investor education. We need to just continue doing this, but I do urge that I think we got to go more digital, so that that message, goes wider, and employers continue to do a good job together with the government.
All right, there was Munira Khairuddin, the CEO, also head of Principal Asset Management Southeast Asia. And as we've heard, while Malaysia is making headway in financial inclusion, continued focus on education and digital adoption, employer and government plays a key role when it comes to making this possible. So thank you so much again, Munira. And we can conclude this whole conversation on all of our social media platforms, and that includes astroawani.com. And we'll move on to our next discussion. All right, U.S. President Donald Trump's surprise appearance in Asia has reignited global attention on resource security, and at the center of it all is iron ore. Trump's push for new iron ore deals with Australia and Japan comes amid rising tensions with China, with efforts to diversify access to the minerals that have become essential for advanced manufacturing, from electric vehicles to smartphones. And the agreements, which aim to lock partners into trading with the U.S., are a clear bid to reduce dependence on China ahead of a key meeting with its leader Xi Jinping. And these moves signal potential shift in global pricing power and also trade flows. So joining us via Google Meet is David, Stapled Country Director for Singapore at Shira and Associates, to unpack the implications of these developments. Perhaps we could start with David. We want to start with big headline. We see that former President Trump's presence at the ASEAN Summit in Kuala Lumpur has reignited debates on resource security. He's pushing for new iron ore deals with Australia and Japan at the same time. So how do you interpret this move in the context of broader U.S. strategic interests in the region, please?
Hi, Nabilah. Thank you for having me. China is definitely the undisputed leader of the critical mineral supply chain, producing nearly 70% of the world's supply of rare earths, for example, and processing almost 90%. Which means China is importing these materials also from other countries and then refining them. So as the world's top miner and processor of rare earths, it has imposed increasingly stringent export controls on its refining technology. And now it's sending global manufacturers scrambling to secure alternatives for critical minerals. These are widely used in semiconductor chips, for example, electrical vehicles, military equipment. And Malaysia, for example, agreed on Sunday to refrain from banning or imposing quotas on exports to the US of critical minerals or of rare earth elements. And this fits a broader US de-risking agenda. The US wants to lock in raw material security with allied supply chains and dilute China's market power. For example, in Kuala Lumpur this week at the 47th ASEAN Summit, Washington inked trade deals and mineral pacts with Malaysia and other deals across ASEAN, while also tightening strategic coordination with Japan, for example, framing resources as a geo-economic issue, not just trade. So expect more friendshoring. This will span iron ore, rare earths, and energy metals. And also, of course, currency and settlement experiments that reduce vulnerability in a tariff fight.
Thank you so much, David, for that explanation. But now we want to shift to China, where we see Beijing has banned BHP iron ore cargoes and is pushing for UN-based settlements through the China Mineral Resources Group. So, David, how might this reshape global iron ore trade flows, and what could this mean for ASEAN economies as a whole?
Excellent question. So just to clarify, like the China Mineral Resources Group, CMRG, is still buying iron ore from suppliers in Australia, for example, here, BHP. There is a freeze on certain types, but other grades seem still tradable, subject to permission from CMRG. So centralized buying, as CMRG is doing, plus a gradual push to RMB settlements, shifts the pricing leverage and could re-anchor some contracts away from dollar-only indices. In practice, expect more RMB-linked deals, stop-go purchasing, and more intermediate trading when curbs target specific grades of iron ore. That basically raises risk. For ASEAN, that means tighter hedging. So there needs to be some sort of hedging to account for this additional risk, and procurement agility rather than rerouting, because in the end, China does have a lot of buying power here.
We see that Japan's recent investments in Australian iron ore projects like Mitsui's stake in Ministers North seem to fill a gap left by China. So in your opinion, David, is this a strategic hedge, and how might it influence ASEAN's trade positioning?
It's a classic security of supply hedge. Mitsui and Itochu taking slices of BHP's Ministers North deposit, and earlier also they wrote a big check for Rhodes Ridge. This spreads dependency away from China, while anchoring long-life access for Japan's steel sector. For ASEAN, it signals a tighter Japan-Australia logistics and strategic alignment. And this also allows Southeast Asia to tap more consistent, high-grade supplies. So we think this will benefit the region.
But looking ahead, Guinea's Simandou mine is expected to come online by 2026, adding high-grade supply to the market. So could this challenge Australia's dominance, and where does ASEAN fit into this evolving supply chain?
Yes, so the Simandou mine project, well, which is actually several mines in Guinea, would be the first mega mine in the world, like to reshape global supplies and pricing. The inaugural shipment is expected to head to China because it is the world's top steel producer and consumer of over 70% of global seaborne iron ore. So the high-grade ore from Simandou, which will ramp up to 120 million tons per year later in this decade, will structurally loosen a market long dominated by other mines. That pressures lower-grade suppliers, narrows Australia's pricing power at the margin, and rewards mills for using 65% or more iron ore. So ASEAN's role, like we would expect more transshipment, blending, and feed arbitrage through Singapore and Malaysia, for example, and potentially also cheaper high-grade inputs for Vietnam and Thailand.
Another thing we want to look at is on the ASEAN's new framework on supply chain efficiency and resilience, which emphasizes diversification, also digitalization at the same time. So how well positioned is ASEAN to absorb shocks from iron ore price volatility and geopolitical disruptions, David?
I would say better than before. The framework pushes digitized customs, data sharing, and logistic bottleneck fixes. Malaysia's 2025 ASEAN chairmanship is pairing that with decarbonization and a steel sector roadmap. It won't eliminate price shocks, but it should cut dwell times, improve transparency, and make hedging more usable for SMEs. So as a next step, this playbook also needs to be implemented country by country, and it should be linked to green finance tools as well.
That's an interesting perspective on ASEAN's preparedness. So building on that idea of adaptation, green steel and hydrogen-based DRI technologies are gaining traction in Southeast Asia. Do you see this as a genuine pivot towards sustainability or more of a tactical response to oversupply and geopolitical pressure?
Both, really. Oversupply is forcing differentiation, and certain projects and Malaysia's Green Steel Roadmap show genuine structural movement, and the economy still hinge on gas cost and carbon pricing. So near-term mixes, so for example, gas with a rising hydrogen share, are pragmatic bridges than overnight leaps.
You've touched on sustainability and also innovation, and that brings us to the policy front. So with Trump's tariffs and also China's retaliatory restrictions, which is escalating, what should ASEAN policymakers and investors should be watching most closely over the next 6 to 12 months, perhaps?
So definitely tariffs. You have tariff timelines, for example. A lot of deals were penciled in during the ASEAN summit. However, like agreeing on a deal and then actually implementing them are two different things, right? Like, so it may take some time to finalize the details of these deals and then to actually implement them. There may also be some volatility in US policy making here. So as you can see with Canada, things may change quickly and tariffs may be added in again. Also, how the US deals with China should become more clear over the next 6 to 12 months in terms of tariffs, because this will have wider implications for the ASEAN region. So it remains interesting, and we have to see how tariffs play out over the next 6 to 12 months. Another interesting thing to watch, of course, is the critical minerals situation, with China, like I said, dominating the mining, but also the processing of rare earth minerals, and having put in place export control. So this will definitely lead to diversification that specifically ASEAN countries can benefit from. And the rest then will just depend on policies and any kind of events that we cannot yet account for. So we'll have to see.
David, we have about 1 minute left. So briefly, do you believe ASEAN can actually maintain its neutrality and cohesion amid these competing pressures from the US and China and Japan, or are we witnessing the start of a deeper strategic realignment?
I don't think we will see a deeper strategic realignment. ASEAN will keep functional neutrality, as it always has, and so far it has benefited the region. So we don't see any kind of reason for countries here to realign with one power or the other. It makes sense to deal with both and remain neutral. And we will see a lot of diversified FDI and investment and to hedge against tariff stability, but also issue-based coalitions. So, for example, in terms of supply chain resilience, green steel standards, the US and Japan, for example, on tech and finance. And of course, ASEAN will keep commodity ties with China, its largest trading partner. So the recent ASEAN summit in Kuala Lumpur under Malaysia's chairmanship also showcased exactly this balancing act.
Anon's view there clearly ASEAN's next steps will shape not only just trade but the region's strategic identity. So thank you so much, David, for sharing your insights. It's clear that while the global iron ore landscape is shifting, ASEAN has a real opportunity to shape its own future. And that was again David Stipper, the country director for Singapore, Dizan Shira and Associates. For now, we'll go for a short break. We'll be right back.
Hari esok tak dapat diduga, tapi sediakah kita?
Ada yang perdebatan bahawa GST perlu dikembalikan semula kerana ada yang mempertikaikan bahawa SST itu tidak efektif.
Isu buruh kanak-kanak bukan sahaja dalam bentuk fizikal tetapi juga bentuk moden yang lebih licik dan juga terselindung.
Kita tengok buruh kanak-kanak dan ada juga buruh paksa kanak-kanak.
Kumpulan FB dikenali sebagai grup budak-budak sekolah rendah yang didakwa menyebarkan gambar remaja perempuan tidak senonoh telah pun ditutup.
Selamat datang ke GVverse, gelanggang pertembungan suara hebat. Di sini, bakat sedalam lautan, pengalaman setebal hutan, azam setinggi gunung, berjuang merebut takhta. Dunia bintang kembali menyengat. Vagansers, nadi mereka. Nafas baharu dibawa, pasti memukau. Gegar Vagansa 2025, 2 November, 9 malam, secara langsung hanya di Astro.
Tariffs on imports of products from China reaching up to 145%.
Tariffs on the rest of the world are sitting at 10%. With the potential for reciprocal tariffs to be reimposed within 90 days.
Kunjungan rasmi Presiden China ke Malaysia ini menunjukkan komitmen kedua-dua negara untuk meningkatkan hubungan diplomatik ke tahap yang lebih strategik.
Hello Johor, ayo sertai Astro Home of Kids di Paradigm Mall Johor Bahru. Alami keseronokan bersama keluarga dan rakan-rakan anda.
Jom Raja Lepak!
Anda juga boleh bergambar bersama mereka. Pelanggan Astro boleh menebus pas foto laluan pantas dengan Astro Rewards. Jumpa anda di Paradigm Mall Johor Bahru. Astro Home of Kids, hidupkan keseronokan family di sini.
Welcome back to Niagawani. We are now into a topic that touches every wallet, every business and every border, which is the future of digital payments. ASEAN 2025 is not just a summit, it's a signal. It's a signal that Southeast Asia is ready to redefine how money moves across borders, platforms and also communities. And at the heart of this transformation is fintech, financial technology, and few players are as central to Malaysia's digital payment evolution as Razorpay Kerlek. So under the leadership of Kevin Lee, the company has scaled to support over 5,000 businesses, processing up to 1,000 transactions per second, and is now targeting 10 billion ringgit in annualized transaction value by 2025. Malaysia's digital economy is booming, with retail e-payments reaching 698.1 billion ringgit in 2024, up 17% from the previous year. So joining us now in the studio is a newly appointed country head, also CEO of Razorpay Kerlek Malaysia, Kevin Lee, to unpack this topic further. How are you? Good morning.
Good morning. Thanks for having me here.
No problem, and thank you for coming all the way. But to start of this whole conversation, how do you see Malaysia's digital payments evolving over the next 2 to 3 years perhaps? And what role do you envision for fintech players like Razorpay Kerlek in shaping that future ahead?
Thanks, Nabilah. If you look at how the payment landscape has evolved, it has changed a lot for the past few years. Especially when we talk about the past 6 to 7 years ago, how we started using a new payment instrument called the e-wallet.
Right.
And before that, it was just cards. We talk about cashless cards, right? Credit card, debit card, and the whole evolution of a new payment instrument called e-wallet, or some say e-money. So that has changed the way how we pay 6-7 years ago. And it started mainly with cross-border payments, mainly targeted to Chinese tourists. You talk about Alipay, WeChat Pay, right? And then after that, then the evolution about us local Malaysians using e-wallet. And then now e-wallet has started to become a dominant payment method of how we pay. We practically use that every day. We will buy breakfast in the morning, we shop online. So I think that has transformed the way how we pay, not just on a weekly basis, but how we pay on a daily basis, small amount, big amount. And that has also so that transformed the payment landscape as well, with a lot of innovations and whatnot by the providers, by the fintech players. We ourselves, Razorpay Collect, our vision is to, number one, to help along with the nation's agenda in terms of digital payment or digitalization. When we talk about digitalization, it's not just payments. Payments is just one part of it, right? That's about how you run a business, and payments is always part of it. So our aim is to definitely to take a leading role to be in this whole Malaysian digital payment ecosystem. And we believe that with the combination of the infrastructure that we have built out of India, again, we are owned by Razorpay, which is based in India, and we are one of the unicorn in India. Hence, combining the expertise that we have in India, the scale that we have, the products that we have developed with such scale, with the localization in Malaysia, we talk about the in-depth relationship that we have with Bank Negara, with PayNet, understanding the local market. So we believe that combining both together, that will assist us to accelerate on our growth here. And I think what's more important is also to bring in the expertise that we have built in India because of the scale. We have got millions of merchants in India, from the small merchants to the big merchants. Is to how do we then bring this tech that we've built, to Malaysia and to solve problems, that SME merchants face here, whether it's SME or enterprise. So that's very much our vision for Razorpay Collect in the next 2 to 3 years.
Amazing, and that's a positive trajectory, and we see that it's amazing innovation, but it comes with the consequences, of course. But we're going to put that aside, and we're going to touch on ASEAN context. With ASEAN countries now working together to standardize the cross-border payments, collaboration and also initiatives like the PayNet's Georgetown Accord. In your opinion, how do you see private fintechs playing a role in supporting these regional transactions?
So I think there's 2 parts to it. One is, of course, the government part of it is important. How, even before that, you look at how that's interoperable in terms of QR acceptance within ASEAN, right? Malaysia, you have got Do It Now QR. And then in Indonesia, you have got QRIS, and how ASEAN has come together to build that interoperability in terms of QR acceptance. So government plays an important role. Now then, private sector of fintechs, right? We are the one that comes with building tech on top of that, because you need to be able to have the tech to support merchants. You need to enable merchants. And I think definitely, like what people always say, it takes both hands to clap. So I think that's where the fintech comes in, to build a layer on top of what government has built on. And there's a lot of talks about ASEAN cross-border payments, Of course, there's a lot of talks about Project Nexus, how do you do cross-border instant payments? So it's exciting, and I think that's where fintech companies like us would definitely want to leverage on that, and to see how can we further assist the government on such initiatives.
And I want to see the implications of this regional integration when it comes to cross-border payments. How can I actually empower SMEs, micro businesses, and also underbanked segments? This is the most important underbanked segments, to actually scale internationally and also access more inclusive digital finance services as a whole.
Today, if you look at the SME segment or the micro SME segment. The challenge to them, again, these are the layman people on the ground, right? They are not like us that's having this very in-depth conversation, you know. The part that they always have is, the challenge that they will have is that how do you get on board into accepting cashless, or how do you get digitalized? For us, when we talk about digitalization, it seems so easy for us. But you talk to the makcik, you know, the auntie uncle that's selling that runs a small hardware shop,
micro,
yeah, and wants to sell online. You know, the first thing is that, how do I do it? You know, so that's where we have built products and solutions targeted for SME. And again, I go back to India, because in India, we serve millions of SME merchants. And that's how Razorpay started anyway. And after that, we evolved into enterprise. So we have came up with products where we help to solve certain challenges that SME has. For example, when you want to get onboarded as a merchant, right? You need to have a very seamless experience, you know. So we have automated the whole experience to be self-serve, for example. You know, you upload documents and everything needs to be automated, so to speak. May not be simple, but automated, right? I think that's the first part. To make it easy, hassle-free for an uncle, auntie, or the makcik to get online, right? That's one. I think the second part is that then you need to have a website to sell. Would we think a makcik or pacik would be able to develop a website, or to work with, or to get a shopping cart provider? So then that's where then we come in to say that we enable you such tools, for example, for you to be able to sell online fast. May not need to build a website by ourselves. So that's also another part that we have managed to solve that challenge that SME has, right? And then, of course, the third part would be to enable a very seamless checkout experience for a consumer, right? I think today, as the evolution, you know, of payment acceptance, consumer like you and me expects seamless experience, smooth experience, nice experience. So I think that's where we come in as well, you know, to ensure that the purchase journey or the payment journey is it's nice, smooth, and beautiful. So I think these are the areas that we're trying, you know, to solve, especially when we talk about the SME or the micro SME merchants.
But I think that the digital transformation is moving very relatively fast, but at the same time, their wariness or the awareness is still very much low. But I want to touch on the AI integration that you've included. In your opinion, how is AI reshaping the payment infrastructure, particularly with the launch of MCP 2.0, also agentic AI? Can you actually explain how these are changing the way businesses interact with their payment infrastructure?
So definitely AI, it's a buzzword today. There's a lot of implementation of AI in a lot of business areas. But AI for payments, or what we call agentic payments or agentic commerce, it's still very early stage. We have seen a lot of innovation. We have seen people like Visa, MasterCard has got onboarded into agentic commerce. We ourselves, Razorpay, we have also started our own journey as well, where we roll out our Razorpay MCP, which is the Model Context Protocol, where we allow LLMs, whether it's your ChatGPT, Gemini, or any LLMs, to be able to integrate into our payment infrastructure. So that's what we have done. And Razorpay, it's one of the first in the world that actually roll out MCP. And again, this is part of the whole initiative of us wanted to be, you know, innovating, you know, in terms of the payment space. So agentic payments is still very early stage, but there's a lot of discussion in that. Recently, this is in fact 2 weeks back, we have just launched our agentic payments with OpenAI, with ChatGPT, and this is in India first, where you're able to do conversational purchasing, right? How
does that work?
So let me just go. So for example, you know, if your mom sends you a image of, I want to buy 2 bottles of milk, you know, one butter, for example, you know, and 3 cans of sardine, for example. You throw the image, it's an image, into ChatGPT, and then you say, please search for me, the nearest grocery to my location, right? And then, like any LLM, right? It will tell you, say, how much it costs, stuff like that, and then you want to make a payment, So that's a special initiative that we have worked with NPCI, which is the equivalent of PayNet in Malaysia, via a payment method called UPI, which is equivalent to what we call Do It Now Here Today, right? So you can make your payments through ChatGPT in that sense, So if you look at it, it becomes a very conversational purchase and very autonomous. And then you can check out that way. So this is something that we have just went live as a pilot 2 weeks ago, and there's going to be a lot of exciting stuff, moving forward, And I think it would change the way how we make payments. So when we talk about payments, we talk about checkout process, right? And you envision this in a couple of years' time. There's a possibility that there's no checkout process anymore. There is just a seamless process if you envision that. So I think that's how it's transforming in terms of how AI plays a role in the payment flow.
But won't that bring concerns on data security breach?
So of course, I mean, for any new initiatives, there is a lot of awareness there as well. Like I said, this is still a very early stage. We will need to see how the regulation of framework of AI, plays, in this ecosystem. That's where, Bank Negara Malaysia have recently, rolled out what you call exposure policy document for AI. So definitely, central bank will need to look at what's the framework of AI, and of course, the likes of the Visa, the MasterCard, the PayNet, to look at how do you safeguard, when you talk about chargeback, how do you look at risk, for example. So, I mean, it sounds easy, it sounds simple, but there's still a lot, a lot of work to be done. Surrounding regulations, framework, and awareness as well. Yeah.
And so from AI-powered transactions to cross-border fintech collaboration, the way we pay and also get paid is evolving faster than ever. And in the future, perhaps by 2030, we can actually expect making transaction or payments is as easy as sending text messages or making a call. All right, so that concludes our conversation for today. So I would like to say thank you to the CEO of Razor Pay Collect, Kevin Lee, for coming all the way, and thank you for sharing your insights and taking the time to speak with me today. And you can find this whole conversation on all of our social media platforms and AstroAwani.com. But for now, we'll have to go for a short break once again. We'll be right back.
Thank you.
Malaysia perlu bergerak daripada sekadar menjadi pusat pembuatan kepada sebuah negara pencipta teknologi chip sendiri yang mampu memberi nilai tambah lebih tinggi kepada dunia. Kerajaan bersetuju untuk mempertimbangkan agar pengusaha bot di Sabah dan Sarawak turut layak menerima subsidi petrol RON 95. Sabah kini memiliki 2 tapak rizab biosfera susulan pengiktirafan diberikan kepada kinabatangan oleh UNESCO.
Nak pilih kecergasan mental atau ketahanan fizikal? Gabungkan je lah kedua-duanya. Barulah jadi jago sebenar. Hai, saya Mak Redha. Temui saya dalam Jagung Rakan Muda. Sebuah program terbaru di Astro. Inisiatif oleh Kementerian Belia dan Sukan. Rakan Muda, yakin boleh.
Johor, ayo sertai Astro Home of Kids di Paradigm Mall Johor Bahru. Alami keseronokan bersama keluarga dan rakan-rakan anda.
Jom belajar mereka.
Anda juga boleh bergambar bersama mereka. Pelanggan Astro boleh menebus pas foto laluan pantas dengan Astro Rewards. Jumpa anda di Paradigm Mall Johor Bahru. Astro Home of Kids, hidupkan keseronokan family di sini.
Gaza menjadi medan pembunuhan beramai-ramai dan penghapusan etnik yang sistematik terhadap penduduk Palestin dengan ratusan serangan udara dan darat menyasarkan kawasan kediaman, hospital, sekolah serta kem pelarian.
Polis Kuala Lumpur mengeluarkan 7,013 saman lalu lintas dalam tempoh 2 hari pelaksanaan penuh OPUU.
Perbuatan menghidang atau menonjolkan minuman berasaskan arak dalam majlis rasmi kerajaan adalah bertentangan dengan hukum syarak, moral dan undang-undang negara.
The FBI said 15% of all cyber crimes are reported. So you look at all these numbers of trillions of dollars in loss, and you're like, it's got to be a small fraction of what's actually out there and being actually, taken away from victims. And there are a variety of reasons for that. Obviously, there's, you have to know that you're being attacked, and there's an incident, something's in your system. But also, there's shame involved in some cases. Sometimes you feel like you might be blamed for the crime. I think a lot of it is they feel foolish. Maybe they feel like, law enforcement just won't be able to help them. They see the numbers, trillions of dollars, and they're like, well, I only lost 17,000 or whatever it is. Like mine is so minor. But again, especially from a law enforcement perspective, I encourage everybody to report because A, we can't help you. We can't prevent future victims from being victimized. And also, I think it's the way for law enforcement to understand emerging criminal methodologies.
We have a tendency to share stories when these cyber criminals were successful, when we were breached, when we were a victim. It's equally important to share these stories where you had these cases, of course, of prevention and also where these cyber criminals failed, right? It often boosts their reputation when we come out with stories that say, they were highly sophisticated and successful in breaching organization X, Y, or Z and causing millions of dollars in damages. But, cases that we have seen, for instance, with law enforcement against groups like Lockbit, also when you, for instance, disrupt them or when you're a victim, point out that they have not been deleting data, point out that they have been making mistakes, undermine also that branding element that these groups carry with them.
I think we need to also take into account the full range of small, medium enterprises. How do we make sure that they're protected? What's their role? And we'll need new approaches similar to digital public infrastructure for cybersecurity. What are the tools and capabilities that we make available as a kind of public infrastructure to small, medium enterprises and smaller states that don't necessarily have those capabilities? And, I think one telltale sign is when you see a political leader or a state government using a Gmail or Hotmail address because they actually have higher confidence in the security of these tools than they necessarily do in their own IT systems.
Up until now, the interplay between government and the private sector has been a little bit of, well, it's not my responsibility, it's your responsibility, and the cost should be on you. I think we need to change that mindset. So investing in security by design or resilience by design is seen as a shared responsibility. So on the one hand, the government is being sure to bring the private sector into, scenario-based planning. Conversely, government also has to provide the incentives.
For those of us in the cybersecurity domain, we've been familiar with this concept of shadow IT. Whatever the official device policy was, users would go out and find their own path, their own tools. They often perform better, they're easier to use, they were mobile friendly, and people would use their own tools and bring them to the office, and that created a vulnerability. What we see now is that people have moved from shadow IT to shadow AI, right? And so, it's like, okay, whatever the, corporate sponsored, LLM model was that wasn't as well branded as the commercial options, people just, vote with their feet, use their phone, and are using these.
Added now a whole new curriculum focused on AI. And in that AI curriculum, provided things in every single chapters about cybersecurity, safety, ethics, security of how you use this AI. And even prior to that, in the national type of curriculum, there are some cybersecurity awareness. Imagine this goes from KG1.
At the time,
copyright was too onerous. It was too restrictive to allow for sort of free flow of knowledge, remixing of creativity, etc. And so the Creative Commons license suite was born. It's this idea that you give credit back to the original creator, and in this beautiful way, the sort of like web of creativity and knowledge sort of spreads throughout the world. How will people keep engaging with that knowledge project? How will you bring in new editors? How will you find supporters? I mean, they have massive small dollar donation campaigns at the end of every year that help keep that public good online. But if no one goes back there, how will they know that this is something that is so valuable that is worth contributing to? Within the sort of Creative Commons, movement and community, we used to say, that when we share, everybody wins, because everybody benefits from us sharing things. And if we do not find a way to restore balance to the information ecosystem, that goes away. When we think about reciprocity in the age of AI, what we would very much like to do and instill sort of into the value system of, should we say, like ethical or public interest AI, is that if you are benefiting from something that is openly available and that people are freely contributing to, that you find a way to give back to that. Everything has been reduced to data, and then that is used for training. And then those models, there's applications being built on top of it that might be being sold back to us. And this is what we could all previously benefit from. So it seems to make sense to us that in those instances, it would be prudent to share some of those benefits back with the broader open community. If you are a major technology company and you have massive revenues as a result of training on the commons, our strong preference would be that you consider how you can reciprocate back to that ecosystem, because fundamentally, that is the ecosystem on which this quote-unquote innovation in technology has taken place.
When the superpowers move, the ground shifts. Power isn't just